Books of accounts. Books of accounts include ledger, day books, cash books, account books, and other books, whether kept in the written form or as printouts of data, stored in floppy, disk, tape, or any other form of electromagnetic data storage device. Journal. Journal refers to a financial record kept in the form of a book, spreadsheet, or accounting software. It contains all recorded financial transactions, information about a business. It is also known as a book of original entry. Journal is where double entry bookkeeping entries are recorded by debiting one or more accounts with the same total amount. The total amount debited and total amount credited should always be equal, thereby ensuring the accounting equation is maintained.
General Journal. General Journal is a daybook or journal which is used to record transactions relating to adjustment entries, opening stock, accounting errors, etc. The source document of this prime entry book or journal voucher, copy of management reports and invoices.
Special journals. Special journals are designed to facilitate the process of journalizing and posting transactions. They are used for the most frequent transactions in a business. Sales and purchases are the most common transactions for the merchandising businesses.
Sales Journal. A sales journal is a specialized accounting journal, and it is also a prime entry book used in an accounting system to keep track of the sales of items that customers have purchased on account by charging a receivable on the debit side of an account's receivable and crediting revenue on the credit side.
Cash Receipts Journal. Cash Receipts Journal is a specialized accounting journal. It is referred as the main entry book used in an accounting system to keep track of the sales of items when cash is received, by crediting sales and debiting cash and transactions related to receipts. Sales on account are booked instead in the sales of journal.
Purchases Journal. Purchases Journal is a special journal that is used to record the merchandise purchased on account. The entries in this journal are made on the basis of invoice received from the supplier at the time of purchase of merchandise. Other names used for the Purchases Journal are Purchases Book and Purchases Day Book.
Cash Disbursements Journal. Cash Disbursements Journal, also known as the Cash Payments Journal, is an accounting form used to record all cash outflows, purchases made in cash or cash disbursements. Examples are accounts payable, materials payable, and operating expenses, among other cash purchases. Examples of other cash disbursement is a deposit to the petty cash fund. A ledger. Ledger is the principal book or computer file for recording and totaling economic transactions measured in terms of a monetary unit of account by account type, with debits and credits in separate columns and a beginning monetary balance and ending monetary balance for each account. It is called the Book of Final Entry.
General Ledger. A general ledger contains all the accounts for recording transactions relating to a company's assets, liabilities, owner's equity, revenue, and expenses. The general ledger works as a central repository for accounting data transferred from all subledgers or modules like accounts payable, accounts receivable, cash management, fixed assets, purchasings, and projects.
Subsidiary ledger. Subsidiary ledger is designed for the storage of specific types of accounting transactions. Once information has been recorded in a subsidiary ledger, it is periodically summarized and posted to an account in the general ledger, which in turn is used to construct the financial statements of a company. Subsidiary ledgers are used when there is a large amount of transactions information that would clutter up the general ledger.
안녕하세요. Good evening everyone. We are going to show how to put the transactions in the general journal and ledger. Enjoy!
Entering transaction data in the journal is known as journalizing. Companies make separate journal entries for each transaction. A complete entry consists of date, account titles and explanation, reference, debit, and credit. The date of the transaction, which is entered in the date column. The debit account title, that is the account to be debited, which is entered first at the extreme left margin of the column, headed account titles and explanation, and the amount of the debit is recorded in the debit column. The credit account title, that is the account to be credited, which is indented and entered on the next line in the column, headed account titles and explanation, and the amount of the credit is recorded in the credit column.
Ledger. The account portion refers to the account title. For example, cash. The account number is an assigned number for each account title to facilitate ease in recording and cross-referencing. The date column identifies when the transaction happened. The item represents the source journal and the nature of the transactions. The reference identifies the page number of the general or special journal from which the information was taken. The debit and the credit columns are the used in recording the amount of transaction from the general journal or special journal. The balance column represents the running balance of the account after considering the debit and the credit amounts. If the running balance amount is positive, the account has a debit balance, whereas if it has a negative running balance, the account has a credit balance.
온 듯해 계속 외면한 순간